You are Bhat, Managing Director at Dalton Capital Advisors, joins us on the show. Good morning, Mr. Bhat.
Good morning.
Overall, how are you feeling the markets will pan out? Are you on the side that believes that the market could now, the bottom is made and we could inch up, or all the scams and all the issues that are there will take the market lower?
I think the market is in a trading range with a reasonable support at around 10,150 levels. But if this were to break on account of these scams and other new news flow that keeps coming, I think there's a very good support at 9,700. May not breach 9,700, but I think the trading range is reasonably tight between 10,000 to about 10,300, in that range. It looks like as if it will continue for some time, because all said and done, there is other than these scams, as far as the economy is concerned, things seem to be in reasonably good shape. GDP numbers are good, interest rates are reasonably benign. Then you have capacity utilization is improving in the industry. If you see the crude consumption level, that also indicates that there is very good economic activity. The problems are with the oil price and with international trade, with trade deficits and stuff like that. But I think these are things that they will probably be subsumed by reasonably good results in the March quarter results.
Okay.
And of course, the monsoon is a big thing.
I think SkyMed came out with a report indicating that monsoon will be normal this time around.
That's good news, but
yeah.
Well, these are early times yet.
Neeraj?
Yeah, I guess so. So, Mr. Bhat, the question mark only would be that if this earnings season does turn out to be as people expect, sans the PSU banks doing what they are expected to do, does that reset the base to such a level from where FY19, even if we have a 15 to 20% growth in the EPS, will not really justify the numbers that we're staring at?
Well, I think the market has, there are some excesses in the market, for no doubt, because the wait for the earnings turnaround with the economy turning around took quite some time. Because we're all talking about this almost about 6 quarters ago, but it did not happen. It is probably just about to happen now. So therefore, I think there were excesses on that. That has been washed away with the 10% correction. But at this stage, I think there will be, I mean, just the expected results may not really give the market enough fillip for it to go up. But I think the market might find a support at around these levels or slightly lower than this.
Okay, I have a very specific question about a piece of the markets much chewed over. One, the PSU bank said, but two, these banks which are now starting to come into the eye of the storm, the ICICI banks, Axis banks, and with that, the drag that we see on a couple of others as well, the yes banks, for example. Typically, the corporate-facing banks get clubbed in a similar bracket. Now, each of these have their own peculiarities as well off late, with the news flow surrounding them. What would you be doing here? As a long-term investor, are you even remotely thinking of trying to buy the valuation dips that we've seen here, or is it too cloudy right now?
I can't talk about specific scripts,
of course,
doubtless, but the issue is whenever there is some sort of haze around specific stocks, especially where there are investigative agencies involved, there is no quick fix on this. It takes time, quite some time, and the market gets bored with these things because there is no end in sight for these investigations. So it takes years generally. So therefore, during that time, unless there's a quick change in management or something like that, I think the stock tends to sort of vegetate, or probably even sort of edge downwards. This is a general comment. So therefore, I think unless there is a quick solution found by the boards, I think it is best to keep off these stocks as of now.
But as a theme, what are you telling your investors? Which are the themes that you're putting money into? Which sectors look attractive?
Theme is the turnaround of the economy and trying to gain out of that. So therefore, you have, there is a robust growth expected in the economy. So therefore, this growth needs to be financed. The public sector banks are in a bad shape. Okay. So therefore, it has got to be the private sector banks and the NBFCs which have taken the mantle on themselves to finance this growth. So therefore, the growth opportunity there is so huge. That is why they're quoting at, some of them at 4 times, 5 times book value. But whether that is warranted or not is a different matter. But I think they are in a good space, and they can continue to do well.
But even in the private banking space, I think whatever concerns PSU banks has now creeped into private sector banks with with issues with Axis Bank, with issues with ICICI Bank, and money seems to be flowing back into Kotak and HDFC Bank. No doubt valuations are high. So will money continue to chase high value stocks in this space, or should someone look at a Axis or an ICICI where valuations are justified but risks are still involved?
Well, I think the issue is this, that there is that growth opportunity, the huge growth opportunity on account of the financing of the growth being probably not possible with the PSU banks. But who is going to capture this opportunity is something that we need to see. And if there are banks which have got a haze around them, they may not be able to participate in this growth opportunity so very well because they have other concerns. So therefore, the banks which can capture this opportunity, they will certainly be bid up, and they will probably be excesses in valuation. But it's quite possible that if this space gets is vacant for quite some time, I think these banks will continue to do very well. So whether this particular valuation is justified or not, time will tell. But I think the market's view is that these are the banks which are high valuation banks. They are the ones who will capture this opportunity in a very big way and probably grow at upwards of 25% for the next 3-4 years, and that is where I think the opportunity is. And they will look cheap if they grow at 25-30% for the next 3 years. They will probably look cheap after that.
Okay.
As we speak, I just want to mark a couple of names. Firstly, Tata Motors is up 4%. So that one is the star of the morning today for sure. Up 4% in trade, 3.5% in trade. Good volumes as well. But the other one, Interglobe Aviation, at new highs, 3% higher, 14.10 for Indigo. Now, question marks above. I mean, of course, this morning we were speaking about who could be the potential suitor for Air India within India, and the two names that come to everybody's mind is Interglobe Aviation and Vistara, because they would have the strength to be able to do that by that kind of valuation that Air India might get, assuming that it goes to the known players that we know about. But Interglobe Aviation is on a roll really, and doing something which is slightly not quite similar to some of the other two listed entities as well. Where are you on the aviation pack, Mr. Bhat? Interglobe, Jet, SpiceJet, again, not getting into specific names, but are you bullish on the pack, and would you prefer the largest player, or you kind of size agnostic out here?
I think one should be size agnostic. One should really look at those who can actually capture that opportunity, because that is another big opportunity where aviation has a huge potential with the numbers, with the capacity utilization improving. So those who are able to maintain this capacity utilization at reasonably high levels on account of pricing or on account of service or whatever they do on account of branding, I think they are the ones who they have the opportunity. But not every one of them is really profitable, but I think profitable sort of capture of that opportunity is what we should look at, and so that therefore you have to be size agnostic.
Okay. Two things I just want to point out. Indigo obviously has a fresh lifetime high, and look at the auto pack. Out of the Nifty, out of the top 5 stocks, 4 stocks are the auto stocks which are gaining. Tata Motors up 3.5%, Eicher up 2%, Hero and Bajaj both over 1%. So auto seems to be doing extremely well. Anything you like in the auto space? How does this auto space look to you?
Well, I think this is one sector which has given a very good account of itself, even when we were grappling with the economic slowdown. So therefore, they have month on month they have been showing phenomenal numbers. And while valuation may be, they may be quite expensive, but nevertheless, if you have to invest in this market, you have to really bet on growth of these companies. And among these companies, I mean, the top ones who have really performed very well in terms of growth and in terms of managing profitable growth, they continue to be the investors' favorites, and I think they will continue to be so because they are the ones who are gaining market share.
Okay. But passenger vehicles, commercial vehicles, auto components, what do you like within this, or two-wheelers for that matter?
I think all of them offer growth opportunities. All of them offer growth opportunities. Of course, not all the stocks there are as good, but I think if you pick and choose the best stocks there, I think they will continue to grow and offer opportunities for the investors.
Interesting. The movement in Bajaj Electricals today, or HSIL, gets me to the next set of stocks. We've completely kind of not getting into conversation the home improvement space. Yeah. It used to be such a buzz in 2017. Yeah. Obviously, the numbers haven't gone down. Some of the conversations have. I mean, are you sanguine about this, and are you looking at opportunities within this pocket? I think the valuation correction out there hasn't been as steep as some of the other pockets. What do you like in this space?
Well, this is one space which will certainly keep growing, because with the accent on new home financing and creating new homes for people, I think that space would continue to grow very well. You have to pick and choose, and there are enough opportunities. If you see in most of the sectors, only a few of them will be able to capture that. And I think even here, while the conversations might have died down a bit, but I think the opportunities exist, and there will be some who will really capture this opportunity, the profitable growth opportunities. And I think we should zero down on them and wait it out.
Darshan, it's been a good start to Bajaj Finserv with its debut on the Nifty.
It has. Bajaj Finserv. I think today private banks are doing well. Yes Bank is doing well. And the theme that we discussed, Tyres stocks are buzzing again today. Ceat is up over 1.5%. Apollo is rather flat in trade, but yes, I think the trend continues. Even if you take a look at Apollo Tyres is flat in trade. Let's pull up Balkrishna, which was one of the top gainers in trade yesterday. So I think close to a 1% move is something that we're seeing on the tire space. That's what we're seeing. But Tata Motors, you can't take your eye off. It's up 4% now. So I think the speech that Chandrasekaran gave to Tata Motors indicating, and they said 10 new launches will come in this year. So I think Jaguar is something that they're clearly focusing on.
Well, what's your view here on the tire companies? I mean, auto anchs by and large could do well. This is a different kind of an auto anch in that sense, because they're present across the sphere. But with the sales going up the way they are and rubber prices coming off the way they are, they're a bit of a sweet spot. Is it
possibility for margin improvement, and growth numbers continue to be attractive with this growth in the auto space. I think they can also participate in that growth for sure. And there's quite a lot of replacement demand also coming. And I think the raw material prices dip has been a great boon to them, and I think so that's what the market is recognizing.
Yeah, I mean, I think, Mr. Bhat, a tire company 10 years ago, we used to operate at 6%, 7%, 5% EBITDA margins. Now they've consistently moved on to that higher grade of margins as well. So as companies, by and large, they've improved meaningfully. Maybe the price hikes are helping, maybe the raw material costs are helping. But do the valuations scare you, or do you believe that it is good enough to place fresh bets onto this pocket? They are subject to the vagaries of the raw material costs in a meaningful way compared to the others.
I think they're more of a commodity sort of play. So therefore you have to be you have to keep your eye on rubber prices all the time. But subject to that, I think whenever rubber prices fall down, I think there is certainly some opportunities. But they are sort of given that they are commodity stocks, it's sort of trading type of stock rather than buy and hold.
Okay. Last question from my end, Mr. Bhat. Where is it that you're not finding favor? Something that, despite the market correction, the valuation correction, more so in the broader markets, you still believe it's prudent to stay away from?
Telecom, obviously, because I think there is a lot of destructive competition going on there.
So including Reliance?
I'm not speaking of anybody in particular, but telecom as a space, I think there is a new paradigm there, and there is completely competitive, destructive competition there. So therefore, there will be a couple of winners or 2 or 3 winners at some stage, and we will have to wait it out. So till then, there is no point being there.
But will it not be because now with Idea and Vodafone coming together, and because now Reliance is stabling with the ARPUs, and they have not started cutting prices even further, it will be a 3-player market. So don't you think that the worst is over for telecom?
See, even with this pricing, there's hardly anyone who makes money in this. So therefore, finally,
but Jio made an EBITDA profit this time around.
Well, be that as it may, but as you say, even the big ones are not able to make money. In fact, I read a report even today saying that even the leader is probably not going to make money this quarter, the last quarter. So therefore, there are issues there. Pricing is a very big issue, and when they form a sort of a nice cartel where the prices go up. Till then, I think they will all bleed, and so that new equilibrium has to be found at some stage when one of them gets enough market share, and they are happy with the market share shared between the 3 of them.
Okay. Read between the lines. I think that's what Mr. Bhat is trying to say. Fair call, Mr. Bhat. Appreciate you taking the time out and joining us today. Thanks much for being with us.
Pleasure. Thank you.